Hello. April has been very wild in the stock market, plunging thousands of points to the downside and then sizably recovering. I'm going to specifically focus on this recovery phase just because a lot of my friends they are all feeling that they missed out on this massive rally. The questions I get, and probably you also have, is this a dead cat bounce? Is this rally real? How far can it go? Why is it going up like this when the economy is not doing that good? I don't have answers from a fundamental perspective, but I want to go through the chart to answer many of these questions. You would have heard me saying death cross and golden cross if you had watched my previous video, and I'm going to focus on those two areas. This is the SPY chart and I'm going to make it a daily chart. And if you notice, this yellow line is the 200-day moving average and the blue line is the 50-day moving average. Whenever the short-term 50-day moving average just drops below 200-day moving average, that is called a death cross and is considered bearish. So right now we are in a death cross, and if you notice, SPY had dropped all the way to 481 and literally recovered now to about 558, almost at 200-day moving average. This is where things get dicey and there is no one size fits all. If you are a trader and you just want to trade something, this would have been awesome, good entry to trade to the long side. But if you are trading in your retirement account, you need to be in a much more stable phase. So let us look at this. What is it that it can go do next? Can it go up or can it go down? I do not have the answer right now, but history will give us some guidance. I've expanded this to 5 years to see where was the previous death cross. Death cross, by the way, is 50 days moving below 200, and I'm looking at it happened somewhere here, but primarily it happened around 2022. This happened. So I'm just going to expand that part. Notice it when the death cross happened, how nasty the fall was. But in between, the most important one is look at this rally. In between, it did rally sizably, and it did rally from here. It moved sizably, and again at that time, I can promise there were a lot of people who felt disappointed that they missed this giant rally. But as long as the death cross was intact, notice once it crossed above the 200-day moving average, it could not survive and it started falling again, and it took a while before even it could cross respectfully in 2023. And that is where the next concept of golden cross happens. Golden cross is the other way. When 50 crosses above, it's bullish. And note, people who bought after the golden cross made a good amount of money. This is very important if you're in a retirement account and you don't trade that often. Once it crossed here, for many months and weeks, notice it has never crossed all the way until this point. Hopefully this makes you feel better. Yes, there used to be occasional violent upside movement, but if you are in for your retirement thing, you have to be careful and you have to be in the stock market when the wind is favorable for you. In between, of course, your trading account, a brokerage account, you can trade all these mini setups that will be in your favor. Coming to this scenario, this SPY is right now right at 200-day moving average. And one thing for sure, if the stock SPY is below 200-day moving average, you might have to wait on any long-term purchases. Yes, sometimes you might miss some good bargains, but If you want to be safe, you always play when the odds are in your favor. And how do you know? First thing is the stock should be above 200-day moving average. Oh, wait till Friday, and you can wait till the entire week, okay, to see if the momentum is moving above. And ideally, wait for the 50-day moving average to be in sync and a golden cross gets formed. That is for the long-term trading. I hope this helped. Just to bring home that point, I want to just put some important charts and see where they are. See, that is still death cross, it's below. Apple is not ready for adding for a long term. Apple, Google, same thing. But if you look at, let us say, Netflix, which has been a shining one, it is on a pretty good path. But again, as long as SPY is not doing good, you might have to be careful on individual stocks as well. Let's look at the NVDA. NVDA, same thing, it is still not ready yet. And the almighty Tesla, there you have it, it's right at 200-day moving average, and it is battling out. Let the big guys, the big funds decide the direction of the market, and you just have to piggyback on it. You do not be the leader because you do not have the capital and you do not have the resources like those big funds. Fear of missing out, everyone has it. Is a major reason why we all try to jump in, and I would say it is not easy, but just to try not to get sucked into it. Trading is a difficult pursuit. If someone tells you or makes you feel that making money in the stock market is easy, be cautious. It is a skill, and like any valuable skill, trading must be learned, practiced, and refined over time. That's exactly why I created this web-based training program. You can learn at your own pace, and I have packed it with every tool and strategy I have personally used, when to use, how to apply, and when they work, etc. Check out the link below. I know how difficult it is to be unguided in the stock market. It is frustrating and you learn with expensive losses. Take a look, and if it is not right for you, there's a full money back guarantee. Try the coupon code YouTube that drops price to less than $100. I trust and I promise it will be a useful tool. Thank you.